Welcome to Smart Stock Watch. Today is March 20th, 2025, and we're diving into Titan Machinery's latest earnings report for the fiscal fourth quarter and full year ended January 31st, 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Titan Machinery, a leading network of full-service agricultural and construction equipment stores, has released its financial results, and there's a lot to unpack, especially with their significant inventory reduction efforts and service revenue growth.
Revenue and profitability overview. Let's start with the top line. Titan Machinery reported a revenue of $759.9 million for the fourth quarter, a decrease from $852.1 million last year. John, what are the key factors behind this decline?
The decline in revenue is primarily due to a decrease in equipment sales, which fell to $621.8 million from $714 million last year. This was driven by softer retail demand and the company's strategic decision to accelerate inventory reduction, which impacted equipment margins. Additionally, the gross profit took a hit, dropping to $51 million from $141 million, largely due to these lower equipment margins.
And what about the bottom line?
Titan Machinery reported a net loss of $43.8 million for the quarter, compared to a net income of $24 million last year. The adjusted EPS came in at $1.88, missing the forecast of Gorn 87 cents. This reflects the challenges they faced with inventory reduction and the resulting margin pressures.
Operational efficiencies and future outlook. Despite the challenges, Titan Machinery has made significant strides in operational efficiencies, particularly with inventory reduction. Can you elaborate on this, John?
Absolutely. Titan Machinery achieved an impressive $304 million reduction in inventory during the fourth quarter, bringing the total reduction since the fiscal second quarter peak to $419 million. This was a strategic move to better position themselves for fiscal 2026, where they anticipate a more subdued demand environment, especially for large agricultural equipment, which is expected to be down by 30% year over year.
And how does this align with their future outlook?
CEO Bryan Knutson emphasized the importance of these inventory initiatives, not just domestically, but also abroad. The company is focusing on optimizing their product mix to meet demand effectively. Additionally, they reported a strong service revenue growth of 14.5% for the full year, which aligns with their broader customer care strategy.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did Titan Machinery's different segments fare this quarter?
The agriculture segment saw a significant decline in revenue, down 13.8% to $534.7 million, primarily due to a decrease in same-store sales and the impact of high interest rates. The construction segment also experienced a decline, with revenue down 5.5% to $94.6 million, affected by timing differences in equipment deliveries.
Were there any bright spots?
Yes, the Europe segment reported a revenue increase of 6.1% to $65.4 million, despite some foreign currency fluctuations. This growth was driven by strong demand in the region. However, the Australia segment saw a decline of 6.5% in revenue, reflecting challenges in the market.
Key takeaways. In summary, Titan Machinery faced a challenging fiscal year with a net loss of $36.9 million compared to a net income of $112.4 million last year. However, their strategic focus on inventory reduction and service revenue growth positions them for future resilience. John, any final thoughts?
While the financial results reflect the challenges of the current market environment, Titan Machinery's proactive measures in inventory management and their focus on customer care are commendable. These efforts should help them navigate the anticipated demand fluctuations in fiscal 2026.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Titan Machinery's performance in the comments below.